Hello, everyone. Welcome, and thanks for hanging out with us today on the Market Report with Cointelegraph. My name's Joe Hall. I'm going to be your host today, and we are joined once again this week by Marcel Peckman and Sam Borgi, who've just appeared on the screen. Now, Sam Borgi is a business editor at Cointelegraph, where he brings a decade of experience in economic analysis and financial market writing. Marcel Peckman applies 17 or maybe 18 years now of experience trading derivatives, options, and futures to the crypto derivatives markets. Gents, how are we doing today? I'm so sorry to have missed you last week, but Sam, you did a phenomenal job hosting. The hair will grow, I promise. For me, it's been a lockdown pandemic thing. How are you both doing? Sam, let's go first.
Well, things are pretty status quo in the market. We haven't seen a lot of crazy movements recently, so things are good. Bitcoin seems to be doing okay. The industry as a whole seems to be kind of on edge over regulation and Gary Gensler, but overall, I think we're in a pretty decent spot, all things considered.
Absolutely. It's funny you mentioned that because I was at the European Blockchain Convention last week, which had loads of people from HSBC, Santander, Credit Suisse, big banks, and all they were talking about was regulation. And weirdly, all the crypto bros and blockchainers were keen to talk about regulation too. How about yourself, Marcel? Is regulation or régulation, is that the word on the streets in Brazil right now? You might be on mute there.
I was going to say exactly the same word, regulation. It's all everybody has been asking over the past week, because if I'm not incorrect, we had the IMF issuing a paper against making Bitcoin legal tender. We had Gensler some 10 days ago. And then we had the Treasury, President, U.S. Treasury, Yellen, also saying some negative, bearish remarks for cryptos. So I think for institutional investors, forget about retail traders that are trying to look for the next 1,000% altcoin rally. When you think about large institutional clients, whenever there's some additional involved or regulatory uncertainty, they will tend to avoid investing in such periods. So it creates some FUD. So considering the amount of FUD that we had last week, I think Bitcoin and cryptocurrencies did fairly good.
Exactly. Yeah, we're bearing through it, and that's also the point. We're here for you guys, the viewers at home, to talk about these important headlines, the important themes shaping the industry, and of course to hang out and make sure that we're bearing through it together. So yeah, we're looking forward to interacting this week and answering any questions or concerns you might have to the best of our ability, but mostly Marcel and Sam's. Also, if you want 20% off Markets Pro, there is a link in the description just below my talking head. And of course, don't forget to like and subscribe. This is our brand new channel dedicated to all things markets. And we're going to be here week in, week out, with the occasional absence, like myself last week. So to get involved and feel free to drop in the chat. Straight up week, a bit of a change. So we'll look at the first article of the week. This is all about Binance, which every week seems to grab headlines. I'm going to share my screen now to talk about the article in question. I'm going to scroll up as well. There we go. So here we have the Binance CEO, CZ or CZ, as he's known in my part of the world, who responded to Forbes' claims they don't know how an exchange works. Binance, obviously, the largest or one of the largest cryptocurrency exchanges by volume trading or by just sheer market cap, that or Coinbase. The key thing to understand here is that CZ took to Twitter this morning saying they seem to not understand the basics of how an exchange works. Our users are free to withdraw their assets anytime they want. This was in response to the Forbes article, which CZ essentially dismissed as FUD, which stands for because the Forbes had accused him of taking part in what they called backroom maneuvers, transferring stable coins around. This was the cause for concern in the mainstream media. I mean, obviously, Forbes is one of the largest mainstream media publications, causing for CZ's rebuttal on Twitter this morning. Guys, I'd love to bring you two onto this, Marcel and Sam. I know that CZ is very quick to dismiss things as FUD. Firstly, was there any basis to these claims that there were some backroom shenanigans going on with Binance and their treasury? Was it something that we should be worried about? Marcel, you're smiling away there. What have you got to share with us?
I think the first thing you should know about CZ is that when he say that Forbes or whoever doesn't know how an exchange is supposed to be run, if you watch CZ's excuses, for example, when somebody caught that the Binance USD, the stablecoin, issued BNB chain did not match the amount that was supposed to be bridged, meaning there was more coins than it was supposed to have. CZ merely said, oh, it was an operational mistake. We found out about that and we already adjusted and corrected. So he's basically saying that even themselves, even Binance, doesn't know precisely how to run a regulated crypto exchange. So he's blatantly lying here, because much of this, the things that they are doing, for example, Merit Circle is this arbitrage desk, market maker, which CZ also happens to own this entity. So Forbes article about 10 days or 2 weeks ago said they caught $400 million flowing from Binance US to Merit Circle. And by legal terms, Merit Circle should not be a client of Binance US. It should only trade with Binance International. So there's a bunch of unexplained things. So I'm not saying CZ is a liar. I'm just saying he's making things up as it goes because the regulation is not super clear.
It's that was actually going to be one of my questions. What's the real story here? And of course, Cointelegraph isn't going to call CZ a liar, and these are our personal opinions that we're sharing on this channel today. But it does make you wonder, you know, what's really going on. And this connection with Circle is obviously very key. Sam, what would you like to add here to this story? What is it that readers should know about what's really going on with this Binance FUD story?
Well, it's really difficult to know exactly what's going on, right? I mean, we had the article come out and we had CZ's response. At this point, it's really difficult to kind of get a handle on where the truth lies. I know that Binance has been kind of at the center of a lot of speculation about, you know, shady backroom dealings or shady maneuvers, but that seems to be part and parcel of the crypto exchange industry as we know it. It's still evolving. You know, Marcel mentioned the regulatory uncertainty. So it's hard for me to draw a conclusion based on the article and based on CZ's response, but maybe where there's smoke, there's fire. But I don't want to add unnecessary FUD right now to Binance because they've experienced quite a bit of it over the past year.
That's very fair, fair judgment there as well. I mean, I was in Gibraltar in June of last year because I'd heard wind that, or got wind that CZ was visiting there with the intent to set up like a European headquarters. And he managed to get the CEOs of all the largest sort of exchanges and European interests in crypto to assemble for a barbecue in an old fort that used to be like Britain's defense against Spain. So this is the kind of sort of underworld of crypto exchanges that's currently going on. There's lots of stuff that we're not privy to finding out about or privy to that information. So one thing that might be said online could be the polar opposite of what's actually happening behind the scenes. And that's one of the really key things to understand about the crypto industry or the crypto economy as we see it right now. The news that we're able to tell and the news that's really going on, there's a fine line. Yeah, Marcel, go ahead, sorry.
I'd like to remind the viewers that every time you see a big article specifically focused on crypto companies on Forbes, Bloomberg, Reuters, whatever, you got to remember that those venues and channels and websites and services have their advertisers and have their sponsorships. So who knows if there's somebody out paying for bearish news against cryptos or crypto firms. It could be the US government. It could be a competitor like Coinbase, which is regulated in the United States. We'll never know the true story behind who's pushing those stories. The point, in fact, is that they do not have hard evidence enough to go to a judge or to go to a court and say, well, Binance is stealing money from clients or diverting funds. Had the proofs have the evidence being clear, there would already been a case. It's just some blatant allegations from Forbes, which certainly needs to be investigated. But right now, you cannot take that as a proof, as an evidence. It's merely, for now, it is merely FUD. FUD, yeah.
Exactly. And yeah, you rightly say there, you rightly mentioned that the news can be bought. And if there's anything that's true in this world in 2023, yes, news sources, journalists, news companies, they can be bought. Not us, of course, not us. We are, journalists with integrity. But and of course, the other thing is that it could be distractionary. There could be a real story happening under the scenes here that we're not privy to yet. So an interesting story that really reflects a lot of sort of key points about the industry. I think it might be time to move on to the second article of this week, which is all about Solana, or Solano, as it went offline for the umpteenth time. Article here coming from Braden in the Australia team. Solana CEO hoses down claims the network outages were caused by on-chain voting. So now it's become a bit of a given that the Solana network is the Solana not work. I'm going to try and get in as many of these puns as possible. Sorry, guys. And the key thing to note here is that Anatoly Yakovenko, the founder and CEO of Solana Labs, denied claims that Solana's network outages were caused by a high volume of validated messages and its on-chain voting system clogging its consensus layer. So he's not denying that the network went offline. He's denying the reasons behind its outage. The root cause of the recent 20-hour network outage is still not clear, but the CEO just wants to put it out there that it wasn't this on-chain voting system. Gents, I think we've actually got a chart, haven't we, to show of how many times the network has gone offline now. Why do we still talk about Solana? Is that a fair question to ask right now? Aren't blockchains supposed to be decentralized? Aren't they supposed to be tools which don't go offline? Because the fact that they go offline means there's an on-off switch. Am I being a bit too harsh here? What do you think, Marcel?
First of all, if we're going to criticize Solana for being centralized, we need to remember that there's no such thing as absolute decentralized. Even Bitcoin depends on nodes, depends on developers, depends on miners. So if a group with large enough influence can convince other users to upgrade their nodes or to install the SegWit or to include the Lightning transactions, etc. Changes can be made even on Bitcoin. Yes, it depends on consensus, but it's not something that's written on the stone that cannot be changed forever. So decentralization is a degree. It's not something that it's 0 or 100. Of course, in Solana's case, as the validator need a really strong computing power. There needs to be a strong investments, otherwise they don't work. It becomes a lot more centralized than Ethereum and its competitors. But I do think that for some cases that don't need so much decentralization and you need a huge processing power from validators, Solana is a semi-decentralized blockchain that can offer a solution. So I think it's valid to have some use. I don't know if it should have its own token worth over $1 billion, but I think, yes, it should exist. It should be given space for testing and breeding. That's what it's all about.
Fair enough. No, you make very good points there. And I mean, I guess the argument that if it's not decentralized, then it's not censorship resistant, right? And if we can continue forward saying that Solana is semi-censorship resistant in that it can be turned off and on, then I guess it's still a good test bed, right, for all the amazing and wild and wonderful things you can do in the crypto space. Sam, what did you take from the? I'm going to work it out while you're talking. What did you take away from the 12th time, I'm guessing, that Solana has gone offline? I'm going to get the answer for you now, though.
I mean, my reaction was no different than the other 11 times. I mean, this happens all the time. For me, I was less concerned about the alleged reasons why it went down. I mean, we know that there's issues with the tech. This has been the case now for a long time now. So for me, I guess there's really a big debate around Solana now because of all these outages. It's like, what's Solana's future going to look like? Well, if you're an investor, obviously you're betting on the network effect, supposedly, and you're betting on the fact that it's a well capitalized project that's still ironing out the kinks. But this whole blockchain crypto industry is now 14 years old, and we've been ironing out the kinks for the past decade, and projects are still having these issues. So I guess for me, the real jury is still out on the real use case of blockchain beyond money, right? So I'm not saying there's not. I mean, there's a lot of potentially interesting aspects of blockchain technology, but right now we're seeing a lot of the limitations of a lot of these ambitious projects, and whether they actually have a real viable use case beyond the original. So I don't know. I have an open mind on it, but Solana going down for me is nothing new. It remains to be seen how much it's going to affect, let's say, investor sentiment or consumer sentiment down the road when you have a very unreliable infrastructure. So I guess the jury's still out on that.
Yeah, no, it's almost admirable, the tenacity and the just stubbornness that some blockchain developers put into their craft, right? I mean, just this last week, there was a company that was promoting putting cows on the blockchain and ensuring that the cows' vaccine passports are included on the blockchain. And I thought I'd seen it all when, was it 2 or 3 years ago, someone was putting cabbages on the blockchain as part of like a farming sort of industrial, agricultural industry unit. But yeah, cows was a new one. So, you're going to put Maisie on the blockchain, you need to put Daisy on the blockchain, and you're going to track them throughout their lifespan. But, and when I asked the group, but what do you do when the farmer accidentally registers the wrong information? Because obviously it's immutable, right? So if you make an error, then you can't go back and change it because that's what a blockchain is supposed to be like. That's why Solana shouldn't be able to be turned on and offline. To which they replied to me, oh, well, with that, you would just go back and you'd edit undo. And I was like, okay, so again, we're talking about blockchains without actually using what blockchains are supposed to do, which is, this decentralized, immutable, censorship resistant sort of tool, which, as Sam points out, seems to work for money and money only thus far over the past, 14 to 15 years of Bitcoin and blockchain's existence. I've got the answer here now, very kindly shared with me by Adrian, that the Solana blockchain has outed 8 times so far. That was, over the past 2 years, from its founding in 2020 to September 30th, 2022. And the most recent outage was its 9th occurrence. So there you go. If you're into Solana, 9 times, maybe 10 times a charm, Go ahead, Marcel.
There's another key piece of news or evidence that we're missing here. Solana was largely, funded by FTX and Sam Bankman-Fried. There was somewhere in time in the 2021, I guess, or 2020. The project was not doing very well. The lead developer was anxious trying to exit the project, had some issues, and the project was kind of handed over to Sam Bankman-Fried from FTX. So he gathered a pool of developers and invested in some of the DeFi projects of the space, including the biggest DeFi exchange or lender in Solana. And after the FTX implosion, all of that vanished overnight. So you got to question yourself, what is the value of Solana without those deep pocket investors pouring money on DeFi projects, paying the salary of the developers to create something? Because Solana, you cannot argue that Solana has a low capacity or low bandwidth or whatever. You can argue if it's centralized or not, but the system works. It has been proved over time. The TVL went above $20 billion. So you cannot say that there's no value in that. But you can question, can Solana survive without FTX or without a deep pocket investor paying for the development cost for the first years? And my most likely answer is no. I don't see a community doing self investments to sustain there.
And wasn't it also funded by A16Z at the start, or A16Z at the start of its sort of the token sale? It was a classic sort of crypto Web3 startup funded by VCs and then eventually dumped onto retail. Sorry, I'm sounding really like Bitcoin maxi right now, but I'm just trying to push back a bit at the Solana sort of blockchain outages and its inception as well. You rightly bring up Sam Bankman-Fried, but was it not like another VC project effectively?
Yeah, Solana got over $400 million worth of investments from VCs as pre-funding. So the company Solana is a private company held by those investors.
Okay, what a wonderful segue into our
$315 million.
Oh, sorry.
$315 million they got funding.
I mean, that's not the sort of money that most retail investors have just lying around ready to support the next decentralized movement. And that's a wonderful segue into the third article of this week, which is all about securities and whether or not Gary Gensler and the Securities and Exchange Commission can call them out as such. This article comes from Jesse, also on the Australian shift. And I thought it was really interesting here, the sort of the strap line to this article, which basically says crypto lawyers weighed in on Gary Gensler's crypto regulation claims, saying that the Securities and Exchange Commission has no legal standing to police the space. If the SEC, or the Securities and Exchange Commission, isn't able to police the space, then who is supposed to police the space? Is kind of the first thing that jumped out at me as being, wow, that's a surprising statement. But basically, you have a lot of crypto lawyers, such as this Alexander Grieve here, who's replying to the New York Magazine piece in which Gary Gensler made some quite interesting comments and was quoted as saying things like, everything is a security except Bitcoin because of Bitcoin's immaculate conception, is what's written in the article. Every company out there is in violation of securities laws and therefore will be treated as a security. You can sort of follow on from there. And then the other thing is crypto is pointless, but blockchain is kind of neat. That's kind of his summation of blockchain, which I guess follows on from what we were talking about with Solana as well. We're still trying to find that use case for Solana. I skimmed through the New York Magazine article and was actually a little bit surprised that in his position as chair of the SEC, Gary Gensler was making quite direct comments about the sort of Bitcoin and crypto industry. I'm really interested to hear what Marcel and Sam have to say on this one, though. Did either of you get a chance to read the New York Magazine piece in which Gary Gensler was quoted? I thought it was, again, a great sort of, it was a great promotional campaign for Bitcoin, not so much crypto. Did it cross your desk, Sam?
I didn't read the article. No, I mean, for me, I guess the issue with the SEC and with Gary is this retroactive regulation that they're doing. This lack of proper guidance and due diligence throughout the crypto adoption cycle has kind of led us to this point. So for me, it's always been, if you're in the United States, I mean, Bitcoin is obviously the safest investment route if you want to get into digital assets, aside from its principles as being fully decentralized. There's also what the SEC has said before, which is that Bitcoin is sufficiently decentralized. And I think that the Commodities and Futures Trading Commission also has a similar view on that. So I guess the issue right now is that, I prefer Bitcoin, above everything, but there's an industry out there that's really experimenting and wanting to push the bounds on smart contracts and blockchain technology. How much does the SEC's, retroactive guidance, how is that going to impact potential innovation in the sector? That right there is the big question. We know a lot of companies now are going overseas, primarily because of the regulatory uncertainties. So for me, I don't like regulators to kind of pick and choose the winners. Obviously, Bitcoin's proposition is vastly different than the tens of thousands of other projects out there. But I don't think the SEC has gone about this the right way. And it remains to be seen how their enforcement action will impact adoption, innovation in the US specifically.
Really interesting comments. I mean, the fact as well that there's Gary and then there's the SEC, and it's a bit like CZ and Binance, right? It's almost become the same voice. If Gary speaks and says something, then people just automatically assume that it's going to be the SEC acting on that behind there. Is it fair to do that, Sam? Is that the right thing for Gary to be doing in the position that he holds?
You know, it's difficult to divorce Gary from the SEC at this point. I mean, I know it's his opinion and, you know, they have their own enforcement action, their enforcement mechanism, but how is the market going to read that when the head of the securities regulator is speaking like this? There's probably going to be, you know, he's not just, you know, just saying that willy-nilly. That's probably going to affect how the SEC pursues its enforcement actions. So I don't pretend to be an expert on securities laws. I just know that there's been a huge gray area around crypto, you know, businesses, startups over the past several years, and this retroactive, you know, began with the whole, you know, what happened back in 2017 with the ICO boom, but I just don't see a lot of clear regulations. Now, what he said is very, very clear, but is it true? Is it accurate? I don't know. I don't know if everything other than Bitcoin is a security. I guess it's up to them to provide some clear guidance on the matter, which they have not provided.
Yeah, exactly. Just more flavors of confusion, basically. But interestingly, that summary of Bitcoin, you know, is separate to the others. It's basically commodity, but blockchain is interesting, and crypto is a bit naff. That's what he preached when he was a professor at MIT 5-6 years ago. I mean, I remember I used to watch those courses where Gary Gensler is the lecturer explaining how Bitcoin and blockchain works, and that was his opinions back then. So you almost wonder whether he hasn't really changed that much, and he's even just become more entrenched in what he thinks, and maybe that'll influence the SEC's decision making. But I'm also just completely pontificating right now and rambling on. So Marcel, the expert right here, the analyst, is going to come in and save me. Marcel, what's really going on here?
Okay, Joe. So I start by saying two things. The first, when you're a hammer, you see everything as a nail. So if your job is to regulate securities, and there's a slim chance that something will be deemed a security, your job is to say, well, Bitcoin is clearly not a security, but all other coins, we need to investigate. I cannot say upfront that those are not securities. There's a huge chance, there's a good chance that those can be deemed securities. So he's playing safe, okay, by doing that. And the second advice I'd give to viewers is follow the money. If you remember all the cryptocurrency projects that have been sued or fined by CFTC, SEC, and regulators, the money that those projects paid, most of that money was not used to pay back investors that lost money on those projects. That money was paid to government agencies. So they directly benefit by finding cryptocurrencies projects that should have been registered as securities. So if you follow the money, Gary Gensler and the government agencies have a lot to benefit by claiming that those are securities.
I like that analogy. Yeah, two incredibly important takeaways there. I guess at some point this year, we're going to get some sort of regulatory clarity. And I guess we've also come full circle there. In the intro segments, both Marcel and Sam suggested that, you know, regulation is the word of the moment, or maybe the month. And right there, we finish on a note of caution and confusion around the SEC and its approach to regulating all these cryptos and Bitcoin. Is there anything else you guys want to suggest here? I was going to do a shout out to the chat, but we seem to be quite quiet this week. I guess everyone's busy building during the bear market. Is there anything you'd like, guys, would like to share, or maybe shill a piece you're particularly proud of, or you'd like readers to check out this week before we round off this week?
No shilling on my end.
Well, that's that. No shilling for you then. No, I'm kidding. Marcel, I know you're still writing a lot, and you've also got your own show that's happening nowadays. And why not take the opportunity to talk about that?
I'll tell viewers that are afraid of cryptocurrency, that have never invested, they can have a look at the ETFs, Bitcoin ETFs available in Canada or available in Brazil and other countries, because those investment vehicles are safe, are audited. They have over 100 years of, over 50 years of usage on oil, on gold. They're pretty safe. So if you're looking to have a Bitcoin exposure without having to open an account on Coinbase or without having to buy from peer-to-peer trades, yes, you can buy the Bitcoin ETF on regulated stock market exchanges. Just look for the ETF and not for the Grayscale GBTC fund.
Interesting. That's a nice piece of investment advice provided by Marcel and Marcel only, not Cointelegraph, as we cannot give investment advice. Okay, gents. Sam, concluding comments for this week, the last day of February of 2023?
Well, my outlook on the market hasn't changed, but obviously regulation is a hot topic, and it seems like the SEC isn't done. So be wary of your favorite crypto projects. If you're a U.S. investor, the SEC is coming knocking, it seems like.
Knocking with its great big hammer. Marcel, closing comments this week?
Get out of the house, get some sun exposure, talk to normies, to regular people on the streets, try to understand what's their perception on inflation and money so you can have a better investment thesis.
Nice. That's really, really good advice. Get out there. Maybe you'll make some friends while you're at it. Brilliant. My name is Joe Hall, Joe Nakamoto on socials. Thank you so much for hanging out with us this week. There's still 20% off in the link down below. We'll be back here every Tuesday, actually. Same time, same place. We hope to catch you there soon. Thank you so much, everyone, for tuning in. Bye-bye.